Welcome back, YouTube, for the second time. I just recorded the whole recap for this trade and for the whole video, and I had no audio because my mic was muted. But without a doubt, let's get right into how we executed today. We took two trades. First one was loser. Second one was a big winner, which made back a lot of our money and set us free on the day. But let's get right into that. Keep in mind we did have news today at 10 a.m. Core price index. So I'm gonna show you exactly how I traded around that to make sure I didn't get lost in that red folder event. Open up trading view. So come into market open. Here is exactly what I'm thinking. We have this entire swing up from London session, and we also see that price sweeps out London highs before market open even occurs. So ideally, what I'm seeing here is that obviously we are nearing all-time highs again. And we actually, yeah, we're not quite at all-time highs again, but we are nearing that. And I was thinking that we are going to push there. So I was looking for longs today. But coming into market open, we see that we have this giant swing up from London low to London's high. And we ultimately, can't even talk now. Since we swept out London high pre-market, we weren't kind of looking for a reversal play. We were looking for a retracement continuation kind of day. As we can see here, obviously we retraced to OTE of London swing up, and we just been continuing higher. But as we can see, come market open. Let's start this off. Come market open, we pretty much dumped like a truck. And what I'm thinking here is maybe I could find a setup before the 10 a.m. news. So ideally, I'd want to find an entry by like 9:40 to short down to this OTE area that I liked. But ultimately, we didn't find any kind of setups. It kind of just dropped down without any kind of solid retracement. Um, but as we keep going, speed this up a little bit. As we keep going, we're looking, but it doesn't happen. And right here, we did form a good setup for the wick model, but I'm gonna tell you exactly why I did not take it. Is because you see right here, it forms at 9:50 a.m. And what it would have looked like is something like this. We swept out true day open, wick off of it. We swept out this 5-minute low, wick off of it. And we swept out this 5-minute. We didn't sweep it out, but we tapped into this 5-minute fair value gap and we reject off of it. So we have a wick off of a key level. We have a wick off of a liquidity low. And we have a rejection off of a 5-minute fair value gap. So ultimately, this is a perfect setup for the wick model. But here is exactly why I did not take this is because if you look at it on the 1 minute, we can see that come 9:50, we formed that 5-minute rejection block. We're in OT of that initial swing up, and this is exactly where I wanted to find a trade for the day. But we're in this swing up, and we see that it is past that 9:40 mark, 9:45 mark. And ultimately, if I get into a trade now, I have to hold it through the news event and then 2 minutes after that. So I do not get flagged by Apex because they have a rule where you can trade through the news event itself, but you cannot execute any kind of trades 2 minutes before it and 2 minutes after it. Um, on their evaluations, they don't care at all. They could literally you could send your accounts on CPI and pass them in 1 day in under a minute. And I've done that before. But ultimately that is one of the riskiest ways to pass evals because it is so hit or miss. But most of the times I do hit on those. I've only lost once so far setting accounts on CPI, but I've only done it 4 times. Um, because I used to try to pass my evals like I was trading them normally, because that's the way to do it. Because you don't want to form bad habits. So the best way to form good habits is to trade like how you would trade on that practice account, like you're going to trade on your real account. But back to why we didn't take this 5-minute rejection block wick model is because it forms at 9:50. We have news at 10. And honestly, if we didn't have news at 10 o'clock today, I think that this would have been its turning point. I think that this would have been its turning point right here. We come in, we wick at this low, and our entry would have looked something like this. 10-point stop, and you would have targeted either this internal high or the resting one above it or previous day high. But the reason why I did not take this is because You can see we don't get tapped in here until 9:58, which is pretty much at that mark. So that would have been flagged, first off. Second off, we have a news event, which is red folder in 10 minutes. And that red folder news event, if you trade today, you obviously see that brought us down a little bit lower. But I do transparently think if we didn't have news today at 10, this would have been the bottom and we would have went up from here. Okay. But that's why I did not take that is because we had news at 10. And that's why it is always important to know what is happening on the given day and what the news forecast looks like is so you don't get lost in a news event like this. But following this, we see we tap into this lower 5 minute fair value gap right here, but also sweep out this 5 minute internal low. Now, I like this setup. The only reason I did only reason I took it is because I like the setup, right? The only thing that could have made it better is if this 5 minute candle over here closed as a bullish candle instead of a bearish candle, right? But let's go into what our entry looked like for this first setup. We take our gone box to find EQ of this candle. No, not of that candle. EQ of this 5 minute wick, 5 minute rejection block. Um, and so now we would go down to this 1 minute to actually see what our entry looks like. So our entry is going to be right here at this 550 level. And we can see ultimately we got tapped in and instantly wicked out. And if you saw my TikTok, this is that 30-second trade that I was in. It got us in and almost instantly got us out. And because of how volatile that wick was and how much volume it had, we lost some more than what we intended to risk just because of slippage. But after this happens, you can see right here, we ultimately go into a whoa, what the what the fuck is going on? What the heck is going on? We ultimately go into a chop right here, but we do see that we are respecting this 5 minute fair value gap. On top of we did just break 1 minute structure right here with this clean candle close above this recent high. All right. The only thing this is missing right now is a inverse fair value gap. But ultimately, I waited this out entirely because this is such ugly price action. You do not want to get lost in that. And then we kind of finally make our way out of this chop and sweep out internal highs and then come back down to this 5 minute fair value gap right here and form a new 5 minute rejection block. And you might be asking what makes this a rejection block is because we reject off this 5 minute fair value gap. We sweep out this 1 minute internal low. Well, you'll see here in a second. We sweep out this 1 minute internal low like so. And this forms our 5 minute rejection block now. Okay. And then this is what our entry actually looks like. We'll come back here just so you can see. So now that we have our 5 minute rejection block, we use our God box to find out what EQ is of it. We set our array to find our level, and we set our entry at that EQ of the rejection block with the standard 10-point stop. If you don't like the standard 10-point stop, then change it. You can use a 20-point stop if you want to risk more money. But that is just how I do it. I always just use a 10-point stop because it keeps this losses small and the win's really big. But ultimately, what I wanted to see from this was come back down to EQ and then take out this 5 minute high. Um, and as we can see, we get tapped in and we have a really strong rejection off of our level, which is what we want to see every time we get an enter like this. We want to always see a wick and reject off of it because our stops are so small. We don't want to see it play around in this 10-point area. We want to see it tap in and reject off of it. That's why it is a rejection block model. Ultimately, we see we get tapped in at 5:45 almost instantly. We're up 20 points. Okay. And since I still have fresh accounts, no, well, not fresh, but accounts that are still building this buffer, the way Apex does it is they do a live trail and buffer up to 2,600 or 5,000, 50,000, 52,600. Sorry. And then after you build it past that buffer, it stops following you. And from 52,600 and so on, that is your clean slate buffer, which if you go up and down, it doesn't trail you at all anymore. It just stays at that 52,600. So like, let's say your total account balance is 55,000. Your real buffer is not that 2,500 anymore. It is 55,000 minus 52,600, which is like, I want to say 2,400, 2,300. do the math really quick. Yeah, 2,400. So now your buffer now is that 2,400 that you're away from that 52,600 plus that other 2,500 of full buffer it gives you. So that will put you at now a $5,000 buffer. So that gives you a lot of room to play with. Um, and after you build the buffer, that's when you want to actually start taking payouts is after the buffer gets built. But anyways, back to the actual trade. Enough of that account rules and all the nonsense. Back to the actual trade. We get tapped in, we have a strong rejection off of it, and since I still have those pressure counts, I like to play these trades smart and secure profits to avoid the trailing buffer getting smaller if I go from winning trade, end up getting break even. But ultimately, I after 40 points, I started trailing and got closed out at 58.5 and closed for just above uh 40 points. And that resulted in that 4R trade. And anybody that knows trading that is good at it knows that anything above a 20 to 30 point trade is considered a good trade. At least that's how it is in my book. If you can keep an average of 2 RR risk to reward and have a higher percentage than 50% win rate, you're profitable. Okay. With this model, I'd say my average RR is around 3.5 in that area. I'd have to go into my journal to see the actual RR, but typically it is around at least 30 points on the given trade. And it could be even higher. Like my initial trade idea was a 6 RR for this trade. And the reason why I did not hold it to full TP is because I do have rush accounts with trailing buffers or trailing drawdown. So I want to secure my profits when I can and take money when the market makes it available. And that's one of the most important lessons I've ever learned in trading is just taking money when the market makes it available because the market can always reverse on your position. The market is unpredictable. We have technical analysis that allows us to get an idea on where the market wants to go. But ultimately, that technical analysis is not 100% definitive reasoning for the market to go that way. It's just a idea and kind of like a scientist making a not a hypotenuse. What the heck is it? A hypothesis. We're pretty much taking a guess, but it is a educated guess because of our technical analysis. Okay. And as we can see, yeah, it does full end up hitting full TP at this high. So the trade idea was 100% solid. It would have hit completely. But like I said, I have fresh accounts, so I play my trade smart and conservative. And I still made $4,000 on this trade. So yeah, we missed out on a little bit of money, but it is what it is. We still made a lot of money today. And that's the most important part, is that we made money and didn't lose money, right? Um, The Discord is free. I laid out everything in there, fundamental wise, confluence wise, and I give you the exact model that I used to hit my first 10K month. It is not this model, but it is a three-step model, which is very simple and very easy to understand. This one, I'd say, isn't as simple. It's a little bit more complex because there is a little bit of key, not key levels, but kind of key differences on what will make a good rejection block versus a bad rejection block and some people can get confused on that. So this one is a little bit more intricate, but the reason why I like it better than my three-step model is because my losses are always a set standard loss at 10 points. So it always keeps my losses really small. And when the trades hit, it makes back those losses in no time. Um, but that is going to wrap up this trade recap, guys. If you enjoyed it, learned something new, like and subscribe, and comment down below if you want any other kind of videos. Because really all videos I have planned are either going to be trade recaps or me working on my car. But like I said before, I do have more car videos planned out. I just haven't gotten all the parts in yet. Like I want to install test pipes on my car next. I'm waiting for those to come in. I want to also black out the sunroof on my car and then eventually put in starlights to kind of give it a more modernized, sportier look because it's a little old, 2014, but honestly, the design on the body is low key timeless and still looks better than I'd say a lot of cars that are coming out in like 2024, 2025. Now, with that being said, That is going to wrap up this trade recap video, guys. That's how I executed. That's how I made money, and that is how you can do it the same. Um, if you're learning from my videos, be taking notes on as far as how I'm executing what I'm looking for in all of these trade recap videos. And two key important takeaways I'd say is trade with discipline and take money where the market makes it available. But yeah, I will catch you guys in the next recap. If I take a trade tomorrow, you'll see me back tomorrow. If I don't, I will catch you guys next week with more trade recap videos. Peace.